Dickey here, and I've got another video that just disturbs me and how this actually gets put out and people actually listen to these idiots. I'm going to run the video and then I'm going to walk you back through it and just see what kind of idiocracy is actually going on there on these videos. So listen to this guy.
You just inherited $1 million. You have 3 years to turn it into $5 million. What would you do?
Go find an apartment building that is worth $5 million and put an offer to buy at a 30% discount. So the building is $5 million. You minus the 30%, that put the purchase price at $3.5 million. So you're going to take it to the bank and get a loan on the $3.5 million. The bank only require you to put 25% down, which is $875,000. You still have $125,000 left over. Let's just say minus the closing cost fees, and let's just say the closing cost is about $25,000. That leaves you in your pocket still with $100,000. All this can be done within the next 90 days. Boom!
Okay, I know we went through this quick, so I wanted to go through the video real fast, and then what we'll do is we're going to go back through it, and I'm going to walk you through just how stupid this really is.
You just inherited $1 million. You have 3 years to turn it into $5 million. What would you do?
Okay, well, let's start with the premise here. The premise is you have $1 million and you have to turn it into $5 million. Okay, so you need to grow it by $4 million in 3 years. Now, that's a heck of a return, okay? But let's take a look at how this guy's decided to do it because, again, his math boggles my mind.
Go find an apartment building that is worth $5 million and put an offer to buy at a 30% discount.
Okay, I don't know how many morons out there are going to sell a $5 million apartment complex for a 30% discount. Not saying it's going to happen, but here's my statement. If somebody's willing to sell a $5 million apartment complex for $3.5 million, guess what? It's not worth $5 million. It's worth $3.5 million, and they wouldn't be selling it for $3.5 million. Just saying. But let's just go through the rest of this.
So the building is $5 million. You minus the 30%, that put the purchase price at $3.5 million. So you're going to take it to the bank and get a loan on the $3.5 million. The bank only require you to put 25% down, which is $875,000. You still have $125,000 left over. Let's just say minus the closing cost fees, and let's just say the closing cost is about $25,000. That leaves you in your pocket still with $100,000.
Okay, so again, let's follow his math for a minute, okay? So you've got to purchase a price of $3.5 million, which is the maximum, by the way, that the value of this property is going to be worth, times 0.75, which means you now owe $2.6 million in debt. So even if what he's saying is actually true, and you actually were able to buy a property for $3.5 million that was worth $5 million, now you have a loan on the property for $2.6 million, and you got $100,000 left over is what he's saying. So let's add the $100,000 on top of this. So you owe $2,525,000 on this property because you have $100,000 in equity set aside, okay, that he's got the extra $100,000. And let's just say it's worth $5 million. So now, even if his math is correct, the best you would be at is $2.4 million. Which, again, that's a heck of a deal if you can get it. But the only reason you got it is the guy was willing to take 30% off from the beginning. Again, I don't understand why we even have why this person has a channel, why anybody listens to this guy is just absolutely insane. It doesn't work that way. First of all, you're not going to get a $5 million property for $3.5 million. And if you did, again, it's not really worth $5 million. But even if you did get that, you wouldn't be at $5 million because you own a $5 million property, but you owe $2.5 million on it. So your net's not $5 million. You can't drop the mic on that. Again, if you're able to get out there and find somebody willing to sell their property cheap, why don't you just pay cash for this stupid thing and earn the income off of the property for the next 3 years? You probably get to the number you're looking for anyway. Could be wrong, but I don't think that I am. But at least you'd actually own it, and you wouldn't have any debt on it, and you have a couple more years, you'd have your $5 million. But again, the numbers just don't add up. It just bothers me that these people actually have a space on YouTube and anybody listens to these idiots. Found another video from this moron, and I really don't understand why anybody listens to this idiot. Now, I want to make this point exceedingly clear. I am not a CPA. I am not a tax advisor. That's not what I'm doing. All I'm trying to show you is that we've got some idiots out there giving you some really bad advice. And that's all I'm talking about in this particular video.
$1,000 a year from your JO to B. You need to start a business. You need to create an LLC. It doesn't matter what business you want to go into. So now that you have created an LLC, let's just say it costs you $500. Did you know as a business owner, you can write off your clothes?
Okay, so let's slow the roll here. He's going to go through a litany of things that he says that you can write off. Now, first of all, most of you self-employed or business owners are going to understand there's a lot of this that you cannot write off. Again, I'm not a CPA. Talk to your CPA. But I'm telling you, you can't write all this stuff off. And if you can, it's not 100%, it's only portions. An example, he's going to talk about food here in a second.
Your phone bill, your telephone, your laptop, your travel, your food, your gas, your mileage.
Okay, so anyone who's ever tried to get rid of mileage and write it off, again, not that simple. Actually, I had a client come in to tell me that their CPA had told them, now this is a hairdresser, mind you, okay, who works at someone else's hairdresser firm. She's a 1099 employee, and she lives about 10 miles from where her salon is. The CPA had her write off $12,000 in mileage. Now, please understand, and again, maybe I misunderstand the IRS code. Again, I'm not trying to quote it, but basically, you're not allowed to write off from your home to your business. Once you're at the business, then you can write stuff off, but you cannot write it off in between. So this is a hairdresser who drives from her house to her salon, never leaves the salon, and does not do at-home appointments. What mileage is she writing off? So again, there's even CPAs that do this stupid stuff. And I don't know if this was a CPA, but her tax person told her to do this. But again, unless you have a client with you, you can't write off your dinners, your lunches. Again, 100%. You get 50% deduction. Mileage is at a percentage basis. Your travel is on percentage basis. All this stuff he's talking about, there's a partial truth to it, but look at the final number here.
You can start writing off a lot of stuff against your income. Let's just say at the end of the year, you invested $10,000.
Okay, now think about this for a minute. You make 50 grand. You're not going to net 50, okay? You're going to gross that. But even if you netted 50, okay? So you got 50 grand there after taxes. And he's telling you to take, of that 50, put 10,000 into this business. Okay, so now you don't have 50 anymore, you've got 40. And he's saying to put the 10 grand in the business so that you can write off these items that may or may not be write-offable. So let's just take food. Again, you're not, unless you've got a client with you, you can't write off the whole bill. So if you spend $5,000 on food, you get to write off $2,500 of it legitimately and get it out. So again, you put $10,000 in there of your $50,000, and he's telling you can get it all back. All you're doing is giving yourself your own money back. Where's the benefit here? And again, I'm not saying that you can't do certain things because you're probably going to buy the laptop anyway. Okay? So yes, if you actually have a legitimate business and you're buying a laptop for the legitimate business, yes, you can write it off. And if you have a legitimate business, you can do this. But again, if you have a legitimate business and you're writing off your car allowance and your mileage and lunches and dinners and things, and your clothing, which again, it has to be very specific clothing to be able to write it off. I can't just write off my suits and ties. It doesn't work that way. Again, there is an IRS code for this stuff, folks. And talk to somebody about this. Again, the math doesn't even make sense. There's no reason to just go out and spend $10,000 on whatever business you want that doesn't have any viability, because that doesn't work either. You can't just write off your business for the rest of your life. The IRS comes a knocking if you've got a business that doesn't make money. Again, this makes no sense. Here he's telling you just go spend $10,000, you can get the tax deduction, get your money back. What's the point? You spent the $10,000. You might as well just buy what the heck you want. Again, I don't understand why anybody listens to this idiot. I don't understand why he even has a channel that he has anybody following. Just my opinion. Dickey out.